Hey traders, Clifford back with another video on trading the charts. So today I wanted to make a video on actually what I believe is one of the best ways that you can set up your charts for success in technical analysis. So with that being said, let's rock and roll. Okay, so when it comes to setting up charts, there's many different ways you can do it, of course. Lots of different traders have most likely different opinions on it. Some use indicators, some don't. I do not use indicators. I don't believe in them. When I first started trading many years ago, I did use indicators because I didn't fully understand technical analysis at the time. But then once I learned that I did not use indicators, I learned that actually price action is the best indicator of all. And I'll show you what I mean by that in a moment. So the way I like to set up my charts, and again, this is what I've found works for me over the years. Every trader is different, but I believe if you do this type of setup, I believe it can also bring you a lot of success. So let's start out with the chart, right? So what kind of chart should you use? Well, in my opinion, I only use the daily charts, and I'll explain why. The daily charts, I believe, are the best time frame to look at. I'm more of a long-term trader. I want to see the big picture of the market, the long-term view, because this is what the banks, the hedge funds, and the financial institutions are also looking at. If I'm looking at a 5-minute chart, the market's going up and down all day long. We don't actually see until the end of the trading day where the market opened and where the market closed. And that's what you really want to see because that is going to show you where the smart money is pushing the market. Um, so what I would do is something like this. So again, the chart I'm looking at here is the euro, but it could be, this could be your favorite stock. This could be your favorite ETF. This could be your favorite crypto or, a futures contract. Whatever asset class you want to use, doesn't matter. This applies to all asset classes. So the first thing I do is I like to use the daily charts because it shows a whole year of data. Okay, so you're looking at 1 year of data basically. So if today is October 17th, or whatever today is, October 13th or whatever, um, then I want to see what the market has done for the whole year. So I'm going to go back to here, October, and kind of like start looking at it like that. I'll pull up this chart just like this. I use candlesticks, by the way. I believe they're a great source of information as well, which we'll get to more about that later. So the first thing I do is I'm looking for the 1 year high and the 1 year low. So let's find that. So here we go. So here's 2022, right? Let's go back to October because now we're in October, obviously. So let's find the low. So here's the low for the year. This is actually happened September 28th, a couple weeks ago, whatever. So let's put a low there. Let's put a line there. Now I use TradingView, but whatever broker you're using, this works the same. You're just going to draw some lines on your charts. Of course, if you use TradingView, this is the easiest way to do it because it's a great platform. So just click here, horizontal line, and boom. Oh, wait, did I put too much there? I might have put a little too much. Hold on. Let me remove these. I just want to put one thing at a time. Okay, so there's a line, right? So that right there, we can make it bigger. Maybe we'll make it, let's make it white and let's make it big enough so it's significant. So there you go. This is the 1 year low of the market. All right. The next thing I want to do is I want to find the 1 year high. All right. So if I go back here, go back to January. Let's go back, go back about a year. That's a good place to start. So if I go back about a year, here's January 2022. Let's go. I mean, you want to find the high that looks significant. So I'm going to say it's not quite a year, but let's use this high. This is the last big significant move in the last year. So let's pop that high in the picture right there. All right. So now we got the 1-year high and the 1-year low. I haven't used any indicators yet, and I'll explain why in a moment. But so there you go, 1-year high, 1-year low. Now, that's the first thing. Then the next thing you want to do, in my opinion, is you want to find the middle point. This is known in Fibonacci as the 50% retracement level. There's a couple ways you could do this. You could take the high and the low, add them together, divide it by 2, or an easier way is you could just use the you could use this Fibonacci retracement right here, which does it for you. You just draw it on your chart like this. Take it down, push it down, and then you see here 0 to 100%. Put the 100% at the bottom, right? And then let it go. So now we have, okay, so let me just extend this out right there. All right. So now you see here, and if you're new to Fibonacci, definitely check out my other video on YouTube about Fibonacci. It explains everything. But basically, Fibonacci is a numerical sequence that the market retraces different points in time. So you got like a 23%, a 38%, a 50%. The one we want to look at is the 50%. So I go like this. There you go. So now we got, and now these other ones, these are good to have too, like the 23, you could leave those up, 38, the 61, and the 78. Those are also significant levels where the market reacts. So basically, this is my chart setup, okay? And this is how I trade every day. Now, so you got a 1-year high, 1-year low, and the 50% retracement level. The reason these levels are important, even these 38% and this 23% and the 61 and the 78, is because these are levels of support and resistance that the market can react to. Like you see how the market touched this level here, the 78%, and boom, it bounced off it. Then it touched this level here, the 61%, and boom, it sold off of it. And then it bounced here. And then now this level is the new level, the 1-year low. Now occasionally you may have to readjust these levels. So like let's say the market makes a new low eventually, in about a couple weeks or a month from now, you'll want to move your charts down to encompass the new lows or the new highs for the year. All right. So that's basically my chart setup. Now, most people might say, well, that's pretty basic. Where's all your indicators? Again, I don't use indicators, and we're gonna get to that in a moment. So the next thing I want to do as a technical analyst is I want to find the trend, right? Just like the old saying goes, the trend is your friend. Now we know if you're new to trends, check out some of my other videos on technical analysis. I got some great basics for finding trends. But basically the market can move 3 ways. It can move up, it can move down, or it can move sideways. So in a downward moving market, you're looking to find a downtrend. And the easiest way to find that is take your trend line tool right here. And what you're looking for is the 1-year high and draw a straight line connecting the lows. Now, when you connect your lows, you want to try and get as close as possible to the trend line. Technical analysis, not everyone understands, but I look at it, it's kind of like being an artist. Like technical analysis is a little bit like art. You're drawing on your charts to forecast where you think future prices are going to go based on, whatever your analysis is, whether it be seasonal analysis or historical, formations and stuff like that. So here's the trend. So this is what I'm getting at. Now, one other thing I'll tell you is when a trend first starts, you may not have a straight line like this, but what you want to do is connect the 3 bars. If you could find 3 bars, you could find the trend. Here's what I mean by that. So like, let's zoom out here. Okay, so you see when the trend first started, there was a high here, and a high here, and a high here. I was able to connect those 3 bars. Now, but then later, what you do is you wait for the market to break below the next low. And then when the market continues to break this low, which was the original trend, now it's below, now the market is below this level. That's when you move your trend line further away, because now you're encompassing the full trend the full trend momentum. Another example is, let me see here, this one, let me go to the end. So here's another example. So like this is a downtrending market. The way you know it's a downtrend, by the way, is because it's making lower highs. See, here's a lower high, lower high, lower high, lower high, lower high, and it's making lower lows. Market made a low, market made a lower low, and a lower low, and a lower low, and so on and so on and so on. So this is a downtrending market. Again, this is the euro, but it could be your favorite stock. So that's how. So basically, this is the new low, right? So that's the low you want to watch, whether it's your stock, your crypto, your commodity, your currency, whatever you're trading, doesn't matter. These same rules apply. In a downtrend, you want to be a seller. I mean, it's pretty much that simple. You want to be a seller, in my opinion, because the current of the ocean, if you think of the market as an ocean, the current is moving down. So why would you want to go against it? I mean, you might be able to make some money going against it, but me personally, I wouldn't go against the trend until the trend has confirmed that, you know, the trend is broken. The trend is your friend until it bends, is like the old saying goes. um, all right, what else? So I don't want to overwhelm anyone. Just wanted to show some basics here. So the last thing I'll say, and then we'll, you know, end this video, save the rest for another video. Why would you want to use the daily charts? So here's why. So you see today, so here's a trade today, right? Where the market and so this is a daily candlestick. So you got to open, high, low, close. If you don't know what I'm talking about, check out my other video where I explain how the candles work. But you got to open, high, low, close. I switched it to bars for a second just to show you that. So the thing is, if you're looking at a, okay, let's switch to the 5 minute. So pay attention to this level here, right? 95.32. Pay attention to this level. Well, where's another level? Okay, we'll switch to the 5 minutes. I'll show you what I mean. So if I'm trading 5 minute, right? This is a 5 minute chart. It's like all over the place. You got big moves down, big moves up. It's just like I consider this to be what's called market noise, and I believe in what's called end of day trading. I don't want to make trading decisions during market noise. I want to wait till all the noise settles and the market closes. So at the end of the day, my mind is clear, the market noise has settled, and I can see what's really going on. Because if I'm trading all this noise, trying to make a profit here, selling here, trying to figure out if this is a little downtrend, selling here, then I get stopped out, or and then it's just sideways. It's like market noise. But if I'm looking only at the daily chart, I could see that all that noise was just really the opening and a little bit of volatility between the high and the low. But I can't really say that 5 minute chart was a downtrend, because although we're in a downtrend, I actually see the market forming a bullish candle here at the end of the day. So the whole thing about it is, in my opinion, you want to look at the daily charts, because every market, every day of trading tells a story. And if you're looking at too short a time frame, you might miss that big story of what's happening. Here's another example. I think today the S&P had a big day. So like, see, if I was looking, right, if I was looking at the S&P on the 5 minute today, it's all over the place. It's going up, it's going down. Now, again, if scalping is your thing and you're good at it, God bless you. Hey, all the world to you. I'm glad it's working for you. But for me, scalping never worked. I was always a long-term trader, and I believe in position trading, adding positions over time. So we'll get to more of that later. But as you see, the market went up, the market went down. But what really happened? Well, the market hasn't even closed yet. Oh, sorry, it did close. It's 418. But what really happened is it faked everyone out. It went all the way down, and the sellers actually came in towards the middle of the day, and said no, we're not gonna take this market lower. We're gonna defend this level here. And boom, it actually formed a bullish candle. You wouldn't have actually seen all this, the whole story, by looking at the 5-minute chart, in my opinion. So that's why I believe in the daily charts. And then and okay, so that's how that works. So I hope that video was helpful for those who might be new to technical analysis, new to setting up how to set up the charts. Again, I don't use indicators. The reason I don't need them is because support and resistance is the best indicator of all. The trend line is the best place to sell. So how would I find the trading signal here without using indicators? Very easy. I wait for the market to touch the trend line and I enter short. Wait for it to touch a trend line, enter short. Wait for it to get close to the trend line, you could enter short too. What's even better is seeing rejection at the trend line, like here. You see rejection at the trend line, which is a shooting star. Boom. I would short that all the way to the bank because it's worth taking the risk, because the market has proven that it doesn't want to move past this trend line. Now, so an example of trading this market right now would be, I would wait until it pulls back to the trend line again. And, if I see some rejection either at the trend line or maybe close to this Fibonacci level right here, which is, by the way, the 78% Fibonacci level, if I see rejection right here, boom, that's the signal for me to go short the euro in this case. So I hope that was helpful for just some technical analysis basics for those who are new to charting, new to setting up how to find the trend, new to how to set up Fibonacci. In the future videos, I'll explain more about these technical analysis concepts, as well as how to get in the trend before these big moves occur, as well as if you do miss the big move, how to get in the middle and things like that. So there's a lot to go with this stuff, and again, I didn't want to overwhelm anyone, but yeah, so if you like the video, feel free to like, subscribe, put your comments below. Look forward to seeing you guys in the next video, and as always, my friends, trade what you see on the charts. Trade well.